What's today's date?
When I did 26 November 2025.
Okay, let's even look at the market today. Generally, I just want to analyze entire crypto market, Bitcoin market for today. Are you getting? So let's even say this is the weekly time frame of the Bitcoin chart. Are you getting it? We have an uptrend ongoing. Are you getting it here? So if we even go by the weekly, we are still in an uptrend. So whenever I only follow what the market is doing. The trend, like when I was trading about 8 years ago, I was told that the trend is your friend. So I would like to go for buy opportunities when the market is going up. I would like to go for sell opportunities when the market is going down. Clearly, Bitcoin is still in an uptrend on the weekly time frame. So I'm not trading by the weekly time frame. I'm trading by the what's it called, the daily time frame, or swinging maybe 2 or 3 weeks, a month or 2 months at most, depending on when I get to my target. I get it. And from what I'm seeing in the market right now, this after we've passed this range, this is the next range we have. Are you getting it? This is the next range we have. So you can see we are still in this range right now on the weekly. So definitely, whenever you're confused or you don't know what the market is doing, please always make sure you go to your your higher time frames to see what the market is doing. Are you getting? So confidently, I will still say that the market is trending perfectly well if I zoom out very well. Since we're in this range, are you getting it? The market was making some moves. Are you getting it? The market has been trending perfectly well. Did a 1 2 3 4 5 to the upside. If I can zoom that well, are you getting it? If I can zoom that well, you see that after it has touched this particular region, are you getting it? Came back and the market started trending, and it has been trending perfectly well to the upside. So whether you like it or not, be it weekly or be it daily time frame, the weekly time frame, they say whenever you are confused or you don't know what the market is doing, or whenever you are seeing some kind of things that's bringing fear and greed into the market, go to your higher time frame to show you whatever the market is doing. And for what I can see, overall, if we should even say what is happening in the market overall, what are you saying? Using Fibonacci levels, are you getting it? We have 3 levels the market will come to, and it perfectly came there, and it's been trending perfectly well. So when you are saying you don't know what the market is doing, you're confident the market is selling off, you're scared, there's fear and greed in the market, news here and there, sentimental analysis, that's because they need those news, those fear and greed to bring the market to wherever it needs to come to. The market maker needs to bring it down to wherever it wants to come to. The market has confidently on the weekly time frame touched our 0.386 Fibonacci levels. Are you getting it? It has confidently touched our 83,000, 84,000 Fibonacci levels, and definitely we have to come back to $100,000. The market is trending perfectly well. So if you don't know how to trade, I think you should take more lessons. Are you getting? The market needs to come back to $100,000, find some sort of, are you getting it, resistance, and come down a bit. Are you getting it? If it breaks it down, we're trending. The market will start trending, changing character to the downside, and switching to at least come back to 60, 50 something $1,000. But since it's still trending to the upside, why are you assuming? Why don't you just follow what the market is doing? And the market has been trending perfectly well. So go to the higher time frame. I'm not on system. I would have been able to do a perfect video. So if I zoom this out very well, and even if I even going to come back to what's it called, $70,000, that would be to me, I think it will be a doomsday. Do you know why I said it will be a doomsday? Because the market makers and the institutions will see it as a threat, because that would definitely come and form something called a head and shoulders pattern. Are you getting it? That might even take an effect and take us down all the way to $40,000, which I don't think the market is ready for right now. So should it continue trending? Yes, let it continue. It can continue trending until it fails. Failure means that until the market does this and come and change character to the downside, then finding resistance, then we can start selling to the downside. Are you getting? Because that will take us all the way, give us a head and shoulders pattern. Are you getting? That will take us all the way down to $40,000. Is the market ready for that? We don't know, but the trends are there. Are you getting it? The trends are there. So if the market is going to fail in these areas, I think we should buy from here to at least $100,000 first. Are you getting it? Another way to find out what the market is doing, let's even leave Fibonacci analysis. Let's look for at least 5 confluences. There's a confluence here again. That what are you saying here? The market has broken structure. The market broke structure to the upside. Are you getting it? Turning here to what? Our demand zones. So I expect that the market should at least come back to the upside. This is the weekly time frame. It's a very, very strong time frame. Are you getting it? Bitcoin is not a stupid asset. It's not. Bitcoin is here to stay. So the market people, Michael Saylors, Cathie Wood, BlackRock, what's it called? Even Trump, even coming into Bitcoin, United States, El Salvador. You think they would just put all their billions and trillions of billions of dollars and millions of dollars into an asset that they will know that they will lose their money or will be there to. So let's continue for that. Let me bring another confluence again. What's the next confluence I'm bringing? If the market has broken up to the broken to the upside, this is a demand zone here we have. So at least since this is a demand zone on the weekly time frame, are you getting it? What is it supposed to do? The market will go to the lower time frames to find out what the market is doing. The lower time frames. Are you getting? This is a demand zone, so definitely we'll have to go back to 0.5 Fibonacci retracement level. So if this is where the market, if this demand zone, definitely the market moves in swings. It goes higher lows, higher highs, higher lows, higher highs, higher lows, until a particular higher what's it called? Higher high fails before we know that the market is going down. Clearly, the weekly is still stating that the market is going to the upside. So at least we are at $90,000 right now. Where can the market come to before even saying that we want to even go to $70,000? It can't just come and just break down a weekly time frame. What's it called? You can't just come and break down straight ahead, break down a weekly time frame. Structure, and just continue going down. This is a weekly. It's a very, very. These are monies we're talking about, millions and billions of dollars we're talking about. Again, so if you come back to this demand zone that at least broke this particular structure. This demand zone was what broke, or you call it order block, I call it demand zone, that broke the particular structure to come and find demands and at least come back to this, as in, what's it called, the new resistance zones. Then if it's breaking down again, they will know we're changing character to the downside. Are you getting it? But as long as it's not breaking down and it's doing this, are you getting it? Coming down and finding another 0.5 Fibonacci, we are breaking to $140,000. It's as simple as that. I don't know. This is how I over the years I've been able to drive the market myself. Are you getting it? It's there. It's not like confidence or you are overconfidence. Are you so sure that the market will do this, the market will do that? That is how the market moves. That is how trading, or let's not even use trading. That's how a proper asset should behave. Find those, come back to those institutional order flows. Are you getting it? And find orders and definitely. Now, we as traders, what do? We make use of these opportunities and moves the market makes. Are you getting it? So if 100,000 psychological support did not hold, where are we supposed to come back to? So even though you have a $94,000, what's it called? To me, it's still a cheap buy to buy around here if the market was going to come down. So calculate your leverage. You should know that your leverage should not liquidate you. At least since you are using risk and money management, you're not using more than 2 to 10% of your total account size. Are you getting? So calculate your leverage that will accommodate your 2 to 10. To me, I use 2 to 10%. People say 2 to 5%. But I think 5% is still too small of your capital size, because I believe definitely you will not have millions of dollars in capital to trade the market. So since you're not having millions of dollars of capital to trade the market, what do? At least at most 10%. At most 10%. You still have 90% in case it goes wrong. That's why I'm stringing and waiting for days or weeks for my trade to hit. Now look at when we started buying from $74,000, $80,000 area here. It took us all the way from, I think, from April, May, I getting it, to August, 3 months before we could take this profit. That's over a $40,000 move. Are you getting it? Which is like maybe 20 something hour. Now I'm saying that this, since we are coming back to this demand and 100,000 could not hold, $94,000 is cheap. Fine, make sure that your 10% out of your capital side is not more than $70,000, because the market will not just rush down on the weekly time frame and come and take you and start going back. This is wrong. This is wrong. Since there's a break of structure here, the market should at least reverse back to the upside a little before doing what? Going down. Are you getting me? This is a break of structure. The market is supposed to find orders in this order block, institutional order block, and come back a little to the upside to 0.5, then before breaking down, even though the market wants to break down. So your leverage is below $70,000, maybe a 5x or a 3x or a 10x at most at $94,000 will not liquidate you at even $80,000, except you are using maybe 25x or 50x leverage. That's when you will get liquidated around this area. So follow up. There's a break of structure. The market will definitely come back to order block. So in conclusively, let me conclude. I was interrupted when I was making video just now. Conclusively, the market is about to do what? To me, from what I can see, so this still demand zone, it has the ability to come back. Are you getting it? It has the ability of reversing back into the demand zone, maybe finding some little leverages before going back to the other side, because I don't know. It can do whatever I want to do, but this is still a demand zone, so it can do whatever it wants to do in this area. So if you're supposed to be buying, at least you are buying now, or you would have bought around these $80,000 ship areas. Are you getting it? Your leverage is below, your stop loss is below $70,000. Are you getting it? Liquidity is below $70,000. So even though it comes back, at least taking more or taking these guys out, it will continue back to $100,000 or more before doing what? So if it's going to $100,000 from here like this, what is it supposed to do? Are you getting it? It's this. At least let's measure and see what the Fibonacci will tell us where the market is coming back to. So if the market is coming back, we're coming back to 0.5 area, which is the red line. Are you getting it? So we're coming back to 0.5 areas or 0.618 areas, which is from at least $100,000. Touch here, do as if he wants to start coming down, break above. Are you getting it? And maybe come around $108,000, which is the resistance zone, before even coming back down to these areas. If you want to continue, before we now start going to $140,000, if you want to continue the uptrend, are you getting it? That's the confidence. So if I'm buying, I know I'm buying from $94,000 back to $100,000. Are you getting it? That's one trade. Then if I know I'm selling, I shouldn't be selling. Why am I selling? Are you getting it? Maybe find this resistance and come back to these what's it called, kill zones. Are you getting it? Then sell back down to probably $90,000 or $90,000, or at least these areas back again. Well, has 0.5 again, and you know what? Continue buying the market to the upside. So this is the confidence I have, and these are the trades I take, because these are the footprints that the market leaves for us to trade, because we don't know what is going to happen in the market next. But definitely the market leaves what? Footprints for us to take. The market does what? Leave footprints for us to follow. So I would rather have those A+ setups and follow the footprint than what's it called? Than just be blind in the market. This is how the market moves. This is a break of structure on the weekly time frame. So I take it that the market will definitely come back to demand, find demand, and come back to this sort of areas. We can take profit. That is over from maybe $94,000 to $100,000, about $6,000 is enough with a 10x capital of maybe like $1,000. Are you getting it? And you 10x the $1,000, are you getting? That's about $10,000, which is like 10%, 0.1% of what's it called? Less than maybe over a little bit over 0.1% of Bitcoin. Again, so if the market is moving, a $6,000 a piece for you, that is a $600 10% profit for you. So if you have more than $1,000, maybe you have $10,000 and you 10x the $10,000, you have actually bought one particular Bitcoin, which you're going to make $6,000 from. So if you are using a $1,000 to make a 60%, which is $600, which is 60% of your capital, I think that's a very good trade. Are you getting it? That's a very good trade, because definitely 10x would bring you less than $70,000 if you had a $94,000 entry or ship. To me, it's cheap. It's cheap. So if you even still maybe get the maybe the $84,000 entry, you are making over like $16,000. Are you getting it? If that deep down, you are still buying little by little, maybe 1%, 2% of your capital. Are you getting it? To get to 10%, definitely you have a very, very good entry below maybe $88,000, $85,000 area, where you are DCing little by little, risk and money management of your capital to get wherever you are. So the market is there for you. So the confidence is knowing that this market definitely will come back to demand zones. Are you getting? Respect the demand and definitely come back a little to the upside, to the psychological support of $100,000. If we cannot break above and we are failing to break above, then we'll come to this skill zone around $100,000 to $108,000 or $110,000. Find those kill zone sales and see if we are coming back straight again. So the price action will tell you what to do, because if we are coming back to this area, we are not supposed to come back. Maybe find another entry around this place again, demand zones, and continue trending this market to the upside. Then if it's not going to work that way, then what next? If it's not going to work that way, we'll go back to the weekly time frame and see whatever the market has for us. If 0.382 the market is respecting right now does not work, then we'll come back to 0.5. Does not mean that I'm confident that the market should go to 140. Whatever the market is going to do is not going to happen it's not going to happen in a day. On the weekly time frame, it should take weeks for it to happen. Are you getting it? So for me, if 0.386, which is $3,000, $4,000, is not going to hold, we're going to come back to $100,000 and come to 0.5. Maybe from there, we'll do a strong ABC move back to $70,000. Are you getting it? Then find our way back to $140,000. Definitely, either way, the market is still is still in a massive uptrend on the weekly time frame. You get it? So on the weekly time frame. So to me, the market is still trending perfectly well if you want to do this, or if you just want to continue trending to the upside or you just want to maybe you want to come 0.5, or you just want to continue trending on the lower time frame. So if you take these guys off, the market is still on a massive uptrend on the weekly time frame. Are you getting it? On the weekly time frame. So the market can do whatever it wants to do, but there are timestamp for us. Are you getting it? The market can do whatever it wants to do. Are you getting it? But there are timestamp for us. Even though it wants to come down, at least let's form a head and shoulders pattern. Are you getting it? Let's form a head and shoulders pattern. Then turn here to support. Break it down. Are you getting it? Then turn here to resistance again. This $90,000 to resistance, and let's go down. $100,000, $90,000 resistance, and let's go down to probably our 0.5 Fibonacci retracement levels before we can know what next to do in the market. Are you getting? So to me, follow the footprints where the market is doing. Forget what you are seeing on the lower time frame, which is the daily time frame or the 4-hourly time frame, because you want to make quick money. Try and see if you can scalp if you don't have large capital. Are you getting? Because no matter what, you cannot be trading with $50 or $100. It will take you time to build the capital to a certain stage before you start taking those risks you want to take. Are you getting? So for me, this is what I have for you. Bye for now. Bye.